Now, Adegboyega, we saw the market is up 15 basis points after, of course, a disappointing start to the week. Now, analysts say that the consumer goods stocks will be what pushes up the market this week. But, of course, we've seen the banking sector seem to be reviving itself and pushing the market up. What is your take on what is driving the market up today?
Well, it's very interesting, really, because typically you'd expect consumer goods companies to always be able to reflect the impact of inflation on the prices of their goods, and therefore you see their sales consistently increasing or performing well. But for the financial services, you will realize that they're not exactly impacted upon by most of those issues and policies that tend to affect the manufacturing sector. And I think more important, with the kind of cleanup which we've seen in the banking industry in the recent past, performance can only go from good to better. The MPC decisions so far shows some stability, and I think that's welcome to a lot of banks. It simply will mean that strategies embarked upon in the first quarter of the year can actually be retained, and their growth and their plans can be sustained along these lines.
Now, Adegboyega, we did see some results come out on the market today. We saw Dangote Fleur release quite disappointing full year 2011 results. Now, we saw turnover down about 2% and profit after tax also down about 75%. How has the market responded to these numbers, and what do you think is the reason behind Dangote Fleur's performance? Of course, we know that the market seemed to rally around that stock last week because of speculation of an acquisition by Tiger Brands, but they don't seem so keen on the stock anymore.
Well, I think you just said it yourself, speculation in terms of the acquisition. But if it's not going to happen, then you have to look at the fundamentals of the company itself and what it's doing. Clearly, there have been certain issues where companies such as Dangote Flour, who do a lot of sales, are concerned. Sales in the northern part of Nigeria will be dropping right now. And I think this was actually touched on earlier on today by the governor of the central bank when he referred to slowing demand. And these are issues which we will start to see coming out in terms of figures for consumer good producers. Dangote Flour, no doubt, would have experienced some sales slowdown. But beyond that, you also have the inflation, and you can only adjust your prices so much before consumers start to resist price increases and demand for a product actually drops and alternatives start to come onto the table. There is also the matter of anticipated energy increases coming up. So analysts looking at these stocks will tend to see a half-year performance that may not quite reflect what was more robust in the first quarter of the year.
Now, like you said, Sanusi Lamido, the CBN governor, did say that we should be expecting to see a slowdown in demand and in GDP. Q1 GDP numbers, he said, will be at 6.1% in the first quarter of this year. Now, this, of course, an indication that demand is going to continue to slow. How do you think this is going to impact companies on the stock exchange, especially now that we're expecting a lot of half-year results coming out? What do you think we're going to see, and how is this going to impact the performance of the stock exchange?
Well, this is there has been a bearish theme so far, and I do say theme, not trend. The theme itself takes or derives from what actually is a global economic outlook. This is trickling down here, and in all ramifications, perhaps it's starting to get down to the ordinary person on the streets, and the companies themselves are beginning to feel it. Going forward, for those companies who are in manufacturing, in consumer goods, there isn't a doubt that we're going to start to see a reflection of that character in their results. Half year perhaps may be a bit too early to see the full impact. I think by the end of the third quarter, we will know pretty much clearly how much the slowdown, how much the increase in energy prices, if they're going to come at all in the next 2-3 months, how all these things are going to affect the performances of these companies. But then they will make an impact, And I think analysts and portfolio managers will start to decide in terms of what they do with those stocks once those figures start coming through.
Well, Adegboyega, I just wanted to find out which companies are the most resilient, do you think will be the most resilient to the slowdown in terms of your own stock picks? You mentioned manufacturing, consumer goods, but can you give us some of your stock picks?
Well, talking about resilience now is a bit, I would say it's a bit early. There are reasons, however, which I will pick certain types of stocks, and I would look in terms of which stocks I think at this stage may be somewhat undervalued in terms of what sort of returns can be achieved from them over time. And when we look at the performances from last year and the trend, I would want to look at a Cadbury. That's a company that has been working a lot on recovering from certain adjustments it had to make, and it's gaining its market share considerably. So within the scope of the market size there, it can continue to gain what is its share. The same perhaps in what may be the pharmaceutical industry for a Nemeth, which is also climbing up in terms of its market share.
Okay.
Now these are companies which altogether should be the ideal stocks for the outlook.
Okay. Well, thank you so much, Adegboyega Adebajo, Head of Structured Finance and Advisory, for giving us your take on the market.